So the institutional investors are starting to do this, and here is one of the report that we have managed to obtain from our research team. It's a pretty useful report that we want to share in this video. So the first slide that you have over here, it is that
Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
about 29.6% of the asset under management by institutions, it is under the fixed income and also the cash. So fixed income, it could be your bonds and treasury notes, all those kind of stuff. Basically just government bonds, very safe, risk-free rate kind of like investments, and also cash. So you can see on the right-hand side, about 12.1% actually in cash. And if you look at over the past few months, the big funds are actually accumulating or building a lot of their cash pile, and so do their fixed income. Now, this data is only applicable until April 2025. So we don't know what is their movement for May and also June. But if you can look at the recent price action from I would say May to June, you can see that the KLCI index had actually rebounded back up a little bit more because the tariff threat have actually de-escalated a lot, and then there's more of a certainty in terms of business activity and also the outlook of the US and China trade war and all of this kind of stuff. So you can, my rough estimation, this cash level could be a slight dip around like May or June for the month of May and June for 2025. And then another few key things is that there are a few sectors that are actually under the oversold category. So we have the consumer, tech, materials, and also for energy. You can see that for consumer, it is right now about 6.3% of their AUM or asset under management, 7.3% for tech, 0.7% for materials, and also about 2.1% for energy or the oil and gas sector. So this could mean that they are not really that bullish, or at least they don't think that there's a good prospects for these few sectors. Now, does this mean that it is time to enter, or is this an opportunity for you to actually buy at a lower price? Well, in a sense, for price discovery wise, it could be an opportunity. However, also it depends on the business prospects for each of these companies in each of these sectors, because some of these sectors are probably they are in a structural decline, or maybe they are currently still facing some sort of like temporary headwinds whereby their customers are not really, or maybe it's just that the industry has a lot of supply. There's more competitors are coming into this particular industry. So if you want to look for ideas, I think these few sectors could be quite of an interesting space to actually look around for. While this is not a recommendation, but then it does pose some sort of like interesting vibes because it is under the oversold category. Now, here is some of the sectors that the foreign institutions are currently bullish or maybe even bearish about. So you can see the top five, we have utilities, telco, bank, construction, and also property. So these five sectors are the one that they have been buying a lot in May 2025. And then the one that they are pretty bearish about, it is commodities. EMS is basically related to your electronic manufacturing service or the tech sector. Obviously the tech sector as well, which is your OSAT and also the ATE sectors, and also the consumer sector. So right now the foreigners are basically out of these four main sectors, whereas they are in for the utilities. So utilities like your Tenaga, YTL Power, YTL Corp, maybe even your TM. For telcos, it's your Maxis, Elcom DG, and all those kind of things. The banks, well, there's a lot of bank names. There's your Maybank, Public Bank, Hong Leong Bank, and all those names. However, if you look at the recent transaction by the fund flow, we actually share this inside our Fire Pro group. They are actually kind of like buying and selling a lot of these bank stocks like your CIMB, Hong Leong Bank, and also their Maybank. So there are times where they are buying, and then there are also times where they are selling. So they are not really how to say, like a long-term kind of investor. They are currently still doing a lot of trading for the time being. However, they are relatively sticky in terms of their investment for construction and property. So what we have discovered is that the two companies that they have been actively buying for the past few weeks are Sunway Berhad and also Sunway Construction Berhad. So yeah, and it's also quite interesting to see that they are also have been actively buying Genting Malaysia Berhad. So why are they buying? Well, we don't know. Maybe they are also doing this for trading. But maybe you guys can research more on these three companies that they have been actively buying. Now, aside from the stocks that I've mentioned, they also did reported that the stocks that is currently on their radar and what the big funds are actually buying, not just the foreign funds, but also the local institution funds. The top stock count that they have been searching a lot is Tenaga, Gamuda, CIMB Public Bank, TM, Maybank, ITMAC, Sunway Berhad, KPJ, and also IHH. Is pretty much the KLCI index. And if you look at the stock count based on month addition, probably means that they have been accumulating, or at least they have taken a little bit more interest in these stocks are the KPJ, Tenaga, IHH, KJTS, Public Bank, MISC, IJM, Axiata, TM, and UEMS. So you can see that there is a lot of it comes from the utility sector, construction sector, property sector, and also the banking sector. Okay, so here are some of the comments that they also did noted that I find it pretty interesting. So number one is that they say, based on their meeting with the Petronas Chemicals management, it is anticipated that the recovery will come from the fourth quarter of 2025. So means the second and third quarter, it is still pretty much of a gloomy outlook. So probably that's why you look at the Petronas Chemical share price also has been pretty much depressed at a certain level. And they are also kind of like waiting and see whether there's some sort of like turnaround play for Petronas Chemical. Also not to mention that the ringgit has recently strengthened a lot. So that also would affect Petronas Chemical a lot in terms of their forex because some of the sales they are actually making in USD. So that would actually incur some sort of like forex losses in their coming quarterlies, assuming the ringgit continue to strengthen against the USD. Our second point, which is the REITs are still doing well, especially for Sunway REIT and also for IGB REIT. They say that they actually announced well above expectation kind of like results. But then REITs are being REITs. Obviously, they are pretty much of I would say like a steady kind of like business where they can get recurring rental income and also distribute out consistent dividends. So I think IGB REIT recently announced like an all-time high kind of like dividend payout, if I can recall correctly. Correct me if I'm wrong in the comments. And then the third point we have over here, which is Penta, Master, and Inari. They have missed expectation. Now, this is already to be expected. If you watch our previous video on why we think tech is actually is going to be posting a pretty much of a gloomy results, it's because the current landscape, at least in terms of the competitiveness, is getting even more intense. China also is coming in to grab some of their market share in the OSAT and also the ATE industry. Some of the machines that they produce are at a lower cost. That's why some of their customers are shifting away and buying machines from China. But that being said, our OSAT and also ATE players are also they have been pouring out money in terms of trying to maybe give some sort of like discount and also offer some sort of better quality in terms of customer service. And also, if you look at the recent news on Pentamaster, they recently announced that they have spent a lot of money. I think it's around like 20 to 30% of their revenue into the advanced packaging development. So I think they are going to be commercializing this around like, sorry, not commercialize, but they're going to commission this advanced packaging segment around like the second half of 2025. So I think that will be quite exciting to see how does it turn out, whether they can get more sales as a result of their capex spending. And then we have IGM and Sunway. They also beat expectation thanks to data center. In 2024, right, they managed to get some contracts from there. And last but not least, we have Hata and Kosan. These two glove company, I mean, this also includes Top Glove and also Supermax. They are still currently facing some sort of like an oversupply situation. And the reason why the share price actually recently tanked quite a bit is because the China and US tariff war actually US actually lowered their tariff by quite a bit. Initially, it was around like 145%. Right now, it's back to 30%. The reduction in tariff actually make their prices not as attractive as it was before, whereby there was a point where the average selling prices for Chinese medical glove actually has risen up to around like I would say 30 USD per 1,000 pieces, as compared to the Malaysian one, which is around like 20 USD per 1,000 pieces. But since the reduction of 30% of tariff, that number actually go down even closer, so around like 25 to 26 USD per 1,000 pieces, which is like I would say 20 to 30% more premium as compared to Malaysian players. But that being said, the glove obviously there will be a time where their inventory for their customers from the US or whether is it from the Europe, they'll start to deplete. And I believe Hatta Lega's management did mention that probably around the second half or maybe even late 2025, where you see their inventory start to show signs of like normalizing, or at least they will be depleting, and then they may start to replenish new stocks. So hopefully by then, we can see some sort of recovery in terms of sales for the big four glove companies. Now, I also want to share a little bit on some of the recent fund flow that is done by foreigners, right? Is that they have turned bearish after buying into the market for, I would say, just 2 months ago, starting from April 2025. And after they have been accumulating, I think they have already reaped up some of the profits already. They start to become bearish again, and they have sold some, I would say, a lot of positions from starting from May to June. And the reason why they are selling is because, well, the first quarter of 2025 results wasn't that of a great results, right? I mean, it is below expectation. This is even before the tariff war actually escalated. So that means is that quarter two results might not be, I mean, more or less even better than quarter one. So you can kind of like anticipate quarter two's results also will be like so-so or to even like to be very bad. That's why foreigners are actually out at the moment. And if you track their fund flow, or if you just go to Fire Pro, you can actually see these statistics on the stocks that they're actually buying right now. Just now I mentioned they have been accumulating Sunway Construction, and also what's the company? Genting Malaysia Berhad. So these three companies are the one that they have been actively buying, and then they are basically like trading other stocks like your bank stocks, Maybank, Public Bank, Hong Leong Bank, RHB Bank. Sometimes they are buying, sometimes they are selling off. So yeah, those are basically what they have been doing for the past few weeks. Now, the final thoughts is that we don't know what is the May and June data for their cash level. That's why my guess is that probably the cash level actually start to drop a little bit, because if you notice, the KLCI index actually rebounded back up, which means there is some sort of like buying activity by the whether it's the institutions or whether it's for the foreigners. So I think we'll keep our Fire Pro members updated if, let's say, once this data is out, whether the cash level, whether it is increasing or decreasing. The second point is that maybe it is time to focus on the oversold sectors. So the sectors like your materials, consumer, oil and gas, and also the tech sectors, which are under the radar for most of these institutions and also the foreign funds. So maybe you want to pay attention to companies that has good fundamentals. Obviously, they have also good business prospects, or at least resilient prospects, whereby their customer didn't really cancel much of an order and is not easily being replaced. So I think in our Fire Pro group also, we did share some of the ideas that we think that is interesting over there. So if you're interested, what are those names, you can actually check it out inside Fire Pro using a 10% coupon. The links will be in the description and comments. Okay, the last but not least is that should you be building cash? Well, we can see that institutions and big funds are kind of like building their cash, especially for foreigners. I think right now they are also some sort of like cashing out of the market. But personally, I have also been building some sort of cash just because I don't really see much of an opportunity in the market at the moment. At least valuation-wise, it has been pretty much of a premium. That's why I'm still waiting whether there's any like potential correction or whatnot. Then maybe I'll start to like deploy some cash and buy stocks that I basically like. So whether you guys think that it is a good time to build cash, well, let me know what are your thoughts in the comments. And before you guys go, this is Fire Pro's May performance. So far, we are still up about 34.9%. The Fire Pro Global, it is up 4.14%, and the Boring Portfolio is up 4.18%. So for each of these portfolio, they have different purposes. Fire Pro Malaysia, it is our best idea for Malaysia. Fire Pro Global, it is our best idea for the global portfolio. So far, we have a lot of names in the China and also Hong Kong space. We also have some sold, I think, recently around like for Vietnam's. We also do cover Singapore and also the USA stocks also. So if you're interested to know what are the global names and also Malaysian names that we have initiated, make sure to check out inside Fire Pro. And if you are a dividend lover, you want to like take a look at the Boring Portfolio. Currently, the dividend yield for the Boring Portfolio is around 6.06%, although it is slightly lower than EPF's dividend rate of 6.3%. But then, I mean, if you look at the recent news, EPF actually said that, anticipate for 2025's dividend rate to be around 5.5%. So, which means also EPF is not doing well at the moment. But if you want to know how we do our write-ups, you want to see some of the information that we share with our Fire Pro, which is the management notes. And also you want to look at some of the videos that we posted inside our SIB course. Well, everything is inside the Fire Free sample, and we have share with you guys 2 free reports or 2 free write-ups. Number one is Delium, the other one is KGB. So just to share with you guys, this is Delium's stock that we have initiated. So we initiated and we bought it over here, and we actually sold it almost to the top over here. And if you want to see how we come up with our thesis, how do we even assess risk, is inside this free sample. And it is totally free. You can just go to the description and comments and then just click on it, register, and you can read all of the write-ups there. And that's about it for today's video. See you guys in the next one.